YouTube family, it is good to see you guys again. I've been getting a lot of questions on my live streams about how to navigate high impact news as an ICT trader. And as we know, as an ICT trader, knowing when not to trade is actually arguably more important than knowing when to trade. Now, this doesn't only apply to ICT, but this is straight from the horse's mouth, straight from ICT's Twitter. So this isn't my opinion, this is straight from ICT. And personally, I had one of my biggest turning points in profitability after learning this exact protocol. So without further ado, let's go ahead and hop in. I'm going to show you exactly how to use the economic calendar, what ICT's exact protocol is, and also some examples on the chart of why we want to avoid trading these certain days. All right, so we're on the computer now. We've got these news rules pulled up, and this is actually straight from one of my trading plans and also straight from ICT as well. So as we go through these, you're going to see that for each rule, I do have one or several tweets directly from ICT stating these exact rules. Just off the top, there are a few general guidelines we want to follow. The first one being, no matter what news release it is, if you are going to trade the release or close to the release, you want to wait at least 15 or 20 minutes after the release if you're going to go ahead and take some entries. The reason being is because right when the news hits the market, there's often a lot of manipulation, a lot of manual intervention, meaning that typical price action, typical structure gets disrespected very often. So I'm not saying you can't go in there and Hail Mary a huge FOMC position hoping to get lucky, but if you want to succeed over the long run, you're going to want to have specific protocol for navigating this safely. So wait 15 to 20 minutes after a release if you are going to trade it. And the next rule is Mondays are typically unfavorable unless they're the Monday of the NFP week or FOMC week. And there's a couple conditions on that, so we'll get into that, but just keep these in mind for now. And now we can dive into the specific news protocol that ICT recommends. So first and foremost, we have NFP. This is usually the first week of every single month, and NFP stands for non-farm payroll. The release typically happens on Friday, but there is also Wednesday NFP a lot of the times as well. So what does ICT say about NFP? NFP and FOMC week. Have your trading done by Wednesday, New York session. Start on non-farm payroll weeks if you are new. And then here again, he says NFP protocol. If you're a new student, your objective is to study setups to the Wednesday AM session, then leave the rest of the week to more seasoned students of price action. So he's basically saying on NFP week, only trade Monday through Wednesday of AM session. No Wednesday PM session, no Thursday AM session. It stops there. Now, I know what you're going to say. Oh, you trade NFP Friday sometimes and NFP Thursday. Guys, sometimes I'll hop on there. Usually I'm not taking a setup. And if I do, again, I'm waiting 15 to 20 minutes after the release. And a lot of times there's not even a setup there. So if you're a beginner especially, stick to this protocol. Even more advanced guys, honestly, there's no point in even not sticking to the protocol, and you'll know that after you backtest this or experience this enough. And after NFP week, there's usually CPI week. This usually happens around the second week of the month. So let's see what ICT says about CPI. He says here, this morning we have CPI at 8:30 a.m. It would be wise to stand aside until 15 to 30 minutes after it hits the market. And then even here he's saying, consider it a lucky guess, don't trade CPI. So in some instances, he does actually recommend not to trade CPI, especially if you're a beginner. You should not be trying to trade around that 8:30 news time. Also, day before CPI. Now, this is one that I've seen personally a lot, and you'll notice I cancel stream a lot on this day. The day before CPI equals no trading. He says, why do I avoid the day ahead of CPI? Hashtag paper cut, and he posts one of his losses. Now, next, we have FOMC. An FOMC protocol, ICT says to avoid the AM session of FOMC day. If you've been trading with me this week on the live stream, you will know that this is very relevant to this week. Both FOMC day and the day after FOMC AM sessions have been super choppy. So look what he says here. FOMC AM sessions are a gambler's playground. He's saying AM sessions of FOMC are basically, if you're trading that, you are a gambler. Next exhibit is right here. Today is FOMC. We stay out, allow the PM session to inflict damage, and then study the second move. So if you are going to trade FOMC, you can trade 15 to 30 minutes after the release hits the market. So this isn't just the 2 p.m. FOMC. This is the 2 p.m. and 2:30 p.m. with the press conference, with the numbers. And then even on the day after FOMC, we want to avoid that as well. So you can see here, now you see why I don't teach AM session post FOMC. You don't need to see this occur a lot of times to learn it is not favorable, or do you? 1:45 p.m. EST live stream will begin. PM session is the focus after FOMC days. Be safe. So he does trade PM session here. So if you're going to trade PM session, you can do it on FOMC day. Just no AM session that day or the day after FOMC. Next, we've got Fed Chair Powell, which is one that is kind of random in terms of when it's scheduled time-wise, but you can still follow these rules accordingly. So you see here, ICT says Fed Chair Powell is job owning at 10 a.m. New York local time today and Thursday. Trade accordingly. And then he says PM session today and tomorrow. So he's saying to trade the PM session. AM session likely to be unfavorable for risk ahead of Fed Chair at 11 a.m. now updated. So he's avoiding the AM session again. And then again on one of these PAL days right here, he says, close your charts, trust me. So clear indication to not trade AM session of Fed Chair Powell either. And in terms of PMI, I just put this one down here because ICT had a tweet about it, but this is the same as every other news event that's not mentioned here. Just wait at least 15 minutes after the release. Now, there are also protocols around both holidays and FOMC and NFP week when it comes to holidays. The conditions are day after a holiday, avoid the AM session. As you can see here, ICT says AM session post-holiday trading is a low probability condition. Sleep in, and he's saying this the day after a bank holiday. Also, NFP and FOMC week, if there is a holiday on a Monday, Tuesday, or Wednesday of that week, you want to avoid the Monday's trading. So if you remember at the beginning, we had Monday listed here of non-NFP and FOMC are typically unfavorable. Only trade it during FOMC and NFP week. But if there is a bank holiday that lands on the Monday, Tuesday, or Wednesday of that NFP week, you do not trade that Monday. And here you could see all of the rules up. So if you want to screenshot this, if you want to pause this, write it down, feel free to. And then if you also want to pull these up on ICT's actual Twitter, you can just go ahead and go to his x.com page, click this little search bar right here, and then whatever event you're looking for, let's just say it's PMI, you could just look up PMI right there, and it'll pull up all of the tweets that ICT has about PMI. If you want to look up FOMC, you can come here, look up every tweet he has about FOMC. So you can kind of go ahead and do your own research about this as well. Now I'm going to go ahead and show you how to actually keep track of the economic calendar and the current news events. This is forexfactory.com, and if you navigate to the main page, it's just going to bring up all of the news, but what I usually like to do is pull up the current week. Let's go ahead and pull up Monday through Friday, hit apply, and it'll show you all the news events for the current week. Now, the news events that we want to focus on in terms of trading NQ is the US news events. So you're going to go under here and basically only check USD. We only want news related to USD, and you could just leave all of this checked, hit apply, and now it's only showing you the US based news. So you can see we got consumer confidence, a red folder right here. We've got FOMC right here, which we just talked about, and we have core PCE, employment costs, just a more general news. Now, in terms of impact, if you do not know, red folder is the most impactful, so you're likely to see the biggest jolt in volatility with red folder. After that is orange folder, and then of course yellow folder, which has very little to no effect, but all of this protocol is based around only red folder events. So real quickly, let's pull up a month. Let's pull up the full month of January, so you can see we have a bank holiday this day. What do we do after a bank holiday? We do not trade, so we're not going to trade. And then we have some other events here. We have NFP week, because it's the first week of January, non-farm payroll Friday. You know, we have all these events we just talked about. So if you're on your computer, pull this up yourself, pull up the month of January, and I'm going to go ahead and dive in the charts and show you guys where I've marked out these particular days where you're going to want to avoid trading. So here we can see we have a daily chart. So each of these candles represents an entire day. And what do we see here? We have Powell speaking at 1:45 this day. So this is the candle for that day. We were at a high right here and we ended up pushing through, and you could see right here, day after bank holiday, small doji candles, so not much much going on that day. Also, day before NFP, one of the days we were told to avoid, as well as Wednesday after AM session, we were told to avoid. What do you see? Very small range days, very tight, very consolidated, very small doji candles. You can also see here we have non-farm payroll. You can also see here we have a Monday of a non-NFP or FOMC week. So in other words, a Monday we are advised not to trade. What do we see again? Small candle, very small range, not much movement. And the day before CPI right to the right of it, small range candle, not much movement. So you're starting to see a pattern here. And look at every other candle outside of those days. This candle here, even this candle right here, this candle right here, these two candles right here, this candle right here. All of these other candles have more range, have more movement, did not close as a small doji candle. So it probably offered more of a target, more of a move, and more opportunities. So you're starting to see even on the daily chart, this is evident on days where you probably don't even want to participate. And then over to the right, we have the day after a bank holiday, little less consolidated, but pretty much only went to this high, didn't even move to external highs till the next day. And then the day after that, we had Trump speaking, which is an event that doesn't happen too often, but typically on these events, it's best not to trade these days either. So you could see very small candle on that day as well. Moving on to the two most recent days, we have FOMC day and the day after FOMC, which are both days, as we covered, that you're not supposed to trade the AM session of. And what do we see? Super small range, super consolidated. And let me tell you, this candle here we traded this morning. Well, we didn't take a trade, but we tape read. It was very consolidated, very consolidated this morning, and you probably wouldn't even want to trade it. So if you want to go ahead and mark these levels on your chart, you can, but I'm going to go ahead and drop down to some of the intraday time frames so you can just see how price reacted on some of these days. Right here we have the day after FOMC, very small range caught between this 4-hour fair value gap up here on the bearish side, and then we've got this bullish 4-hour fair value gap down here on the bullish side. And basically you see price just ranged between these gaps ever since FOMC day. If you drop down to the 1 hour, not much happening either. No real clear PD arrays, a lot of side-by-side candles. Whenever it does move, doesn't move very far, and a lot of wicks as well. So if you went over my strategy video, I showed you guys how to spot out high resistance liquidity. This has a lot to do with it as well, but it's more on the fundamental side. So you can see very choppy, very range bound. And then if you drop down to like the 1 minute, you can see even at some of these levels, we didn't give proper confirmations, no clear market structure shifts with retracements, and then all the in between is just kind of noise. So whenever you're seeing this, you typically want to avoid it. But on days where we can predict it ahead of time, like on the day before FOMC and FOMC day, we can go ahead and just avoid that, avoid any chance at losing some of our equity when we can just save it for days like this where price actually does want to run. You could see also the day Trump spoke, nothing much happened on that day either. Very consolidated. The day after the bank holiday, not much going on this day either. So very still, very consolidated on that day. Day before CPI, not much going on there. Monday on a non-farm payroll or FOMC week. And then you even have the day before NFP, which was super consolidated here. One of my least favorite days to trade, day before NFP. Day after bank holiday, not as consolidated, but still did not have much room to target. Now let's drop down to the 1 hour so you can see a couple of these other days. You could see down by the CPI day, it's real bad down there. Super consolidated, very little candles at all at that point. And even here as well, not much movement. Day before NFP, even worse on the 1 hour time frame. So you're starting to see exactly how obvious it is when you just zoom out and do this. But if you've never zoomed out and done this, if you've never kept track of what happened on what news event day, you've never had the opportunity to see that this is probably why you're putting yourself in bad market environments without even trying to. And I remember too, when I first heard about this, I was like, there's no way. He's just basically telling us not to trade. And the more I would go on these days and try to fight it, try to fight the advice, even on the days where I'd come out profitable with like thousands and thousands of dollars, I would always look back and say, it was not worth sitting through this. It was not worth the stress. It was not worth the up and down, and it was not worth breaking your rules. So these are days that you are very prone to doing all of those things. And if you don't believe me, just go ahead and go through the calendar. Go to any random month. Of course, February hasn't happened yet. yet, but once it does, you can just mark out all of those days and then just scroll through the intraday charts, scroll through the 1 minute even, scroll through the daily, the 4 hour, all of that stuff, and you'll see very clearly 90% of the time you want to be avoiding these days. And there's a very good reason why ICT tells us to do just that. All right, thank you guys so much for watching. If you learned something new, feel free to drop a like on the vid. And if you have any questions, drop them below in the comments as well. Also, be sure to jump in the free Discord. Link is in the description. And check out my last video on the strategy that made me profitable after 2 years of losing money. If you want to check that out, it's over here. And until next time, be safe, be blessed, and I'll see you in the next one.